Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Quenny Goodnight TV on December 1st, Monday. Yes, Huang Peng Wei. So we'll be discussing a few topics. First, let's look at the current situation. Right now, the government shutdown has just ended not long ago, so a lot of economic data actually hasn't been released yet. And for the data that has been released, it's actually from several months ago, so it doesn't have much reference value. Right now, everyone is still pretty much in the dark about the current state of the economy, but as more data gradually comes out, these mysteries will be revealed one by one. At the moment, we can see that overall, the market news is relatively light, especially since it's not currently earnings season. This is actually one of the reasons why expectations for interest rate cuts can have such a big influence on the market right now. Looking ahead, in about a week, it'll be the 10th. Actually, this week should be relatively crucial as there will be a lot of data releases. These data releases will affect the market sentiment going forward, so we'll be discussing together whether, in the context of these data releases, the current high price expectations can continue. In addition, since it's already December, if there are certain stocks that experienced a significant drop but rebounded in November, there are actually some rebound opportunities now. So this is a good time for everyone to consider some rebalancing. You can take advantage of the rebound to recover funds and prepare for the needs of the upcoming market trends. Alright, so for this week's schedule, there are actually quite a few data releases. Tonight, the SN Manufacturing Index for November will be announced. There will also be the release of the ADP report, the Secondary Services Index, and September's industrial output. On the 4th, we'll have the Challenger Job Cuts report and the initial and continuing jobless claims. Usually, the Challenger Job Cuts report doesn't cause much concern. However, at the moment, because people are paying more and more attention to this on the old front as well. So, just as a reference for everyone, on the 5th, we'll have the core PCE for September. Although this is data from a few months ago, it still has some reference value. After that, there will be the University of Michigan Consumer Sentiment Index and the short and medium-term inflation expectations. At this stage, since there is more and more data, it'll help us paint a picture of the economy. So going forward, actually, at this moment, the impact is quite significant because going forward, it will determine the direction of the path ahead. Currently, we can see that as for the ISM Manufacturing Index, the expectation is 49, and the previous period saw a slight increase, but prices are showing a slight downward trend. So if the manufacturing index can stay around 49 or 50, if it can reach about 50, that would give the U.S. economy a bit of support. Going forward, as U.S. manufacturing gradually recovers, there should be a slow upward trend. You can see that it's already been hovering at this level for a while, so we'll have to see if it can stay steady above 50 in the future. Alright, next, let's take a look at the US dollar index. At the moment, the dollar index is showing a relatively weak pattern, and as the Fed is expected to continue cutting interest rates, although right now the timing of those rate cuts is still a bit uncertain, but most likely they will still go ahead with the rate cuts. So under these circumstances, the dollar should. Now it's starting to weaken significantly, and there are signs that this trend will continue into the first half of next year. As for what happens after that, it would depend on how other countries' currencies develop, and we'll need to discuss it further based on the current fiscal and monetary situations. But for now, it looks like the dollar will remain weak for a while. In addition, it's wise to keep a portion in each region. Currently, the US market is also weakening as various expectations rise. You can see that the yield curve is actually in a relatively low range right now. This is a similar situation to what we've seen with younger markets. So at the moment, it's in a relatively low range, but what's really worth noting is the 30-year yield because looking at its recent performance, or rather its current level, it's actually above the short-term bond yields. This suggests that, at present, there are still relatively more concerns about fiscal issues, so long-term corporate bond yields remain relatively high. Next, let's take a look at the current performance of the stock indices. You can see that in the last few days of January, the indices rebounded noticeably. This rebound actually happened against the backdrop of low trading volume, which is why we're currently seeing a price equilibrium. You can screen individual stocks and keep some cash on hand to prepare for future market movements. So as of now, the situation isn't too severe, mainly because of the rebound at the end of November, so the decline throughout October doesn't look as drastic. Overall, it's still within an acceptable range. Now, let's look at the performance of a few other indices. Actually, they're showing the same pattern. You can see that the Dow Jones is in a very similar situation as well, meaning there's a pretty obvious rebound at the end of the month. But if you look at the Nasdaq, it's basically the same situation. Next, the S&P 500 is also showing the same pattern, so right now, everyone is still in a kind of wait-and-see phase. Just like before. If you missed out on the rebound or the sharp drop earlier, now might be a good time to consider adjusting your current positions. If you're someone looking for an opportunity to enter the market right now, you can wait a little longer or look for individual stocks that might have potential. Next, let's take a look at the overall market and some other indices. Actually, right now, even though many indices have rebounded, none of them have surpassed their previous highs. So this rebound still looks pretty weak, and it can't really be considered It doesn't really feel like we're about to enter another bull market. Right now, the real estate sector is mainly just recovering from the previous drop that was caused by sentiment, capital flow, and liquidity issues. There's no sign of any real momentum building up, so it's more likely that the market will just fluctuate here for a while. As for December as a whole, it's very likely that things will just stay as they are, meaning there probably won't be any major moves, and the market will just be waiting for new developments. So right now, that's basically the situation. Going forward, the path the market takes will still be very important. Everyone is just waiting for the economic data to become clearer. We'll be analyzing how things might play out going forward. For now, these next few days should be relatively calm, but as the week goes on, more and more clues will start to emerge. We'll keep tracking things together with everyone as they develop. On another note, over in Japan, actually this morning, the Nikkei, the major indices have seen some declines, and the reason seems to be that the Bank of Japan might raise interest rates in December. But this news has actually been circulating for a while now, and Japan is gradually moving toward normalizing its monetary policy. That direction is pretty clear. However, looking ahead, it seems that Japan still has some reservations about raising interest rates. They remain relatively cautious about future moves. So it's expected that in Japan, unless the direction of continued rate hikes is firmly established, they might just keep taking a wait-and-see approach, meaning that before each rate hike, they'll spend a long time communicating with the market. Then they repeatedly communicate with the government or the public, review the data multiple times, and only when they're sure the situation is really happening in that area will they actually raise rates. So at the moment, if Japan hasn't started a series of consecutive rate hikes yet, when things are still unclear, the yen will likely continue to face some short-term pressure, and we probably won't see a significant appreciation right away. Because of this, actually, Japan's path toward normalization has a relatively limited impact on current stock market valuations and subsequent arbitrage trading. It's relatively limited. Going forward, this is actually a factor that can be observed over the medium to long term. If the yen gradually strengthens along with the normalization of Japan's monetary policy, then it will indeed have some impact on current arbitrage trades. As for Japan's interest rate environment, if things normalize, it'll still be more relaxed compared to the current loose conditions, so it won't be like the whole world's monetary policy is suddenly tightening. There will still be a force holding things down here. Next, let's talk about the Russia-Ukraine situation. Actually, this news has been around for a long time, and in the past few days, there have been a lot of reports about negotiations between the US, Russia, and Ukraine. It seems like they're about to reach a peace agreement, but actually, we've mentioned this to everyone a long time ago. This isn't something you really need to pay too much attention to because it's likely to drag on for quite a while. So for now, let's just keep an eye on it. Now, let's look at the positions of the US and Japan. So even if Japan wants to get upset, there's still some distance between its stance and that of the US. In the end, it comes down to sentiment and looking at the interest rate differential. How long will it take to narrow to a relatively small level? Before we reach that stage, Japan will still be trading, or rather, it will continue with its current approach. The appreciation of the yen, the impact of Japan raising interest rates on the stock market is still relatively limited. In addition, this situation with a 2.5% or so should last until at least 2026. So looking at it now, this news is pretty minor, and its impact on the market should be relatively limited. Alright, next, looking at global news, we can see that in the case of the Honduran election, where the National Party, which is right-wing, is supported, the results just came out today. And this person, it looks like he has also won. Actually, it was a very close race before the election. That is to say, before the election, we were all still uncertain about the outcome. Trump supported the right-wing candidate, and he even posted online saying that if the right wing didn't win, he might consider stopping aid to Honduras. In addition, he also brought up the previous. Similarly, the chairman of the National Party in this country, Orlando Hernandez, was extradited to the US for drug trafficking. So you can see that his support for Honduras is very direct and obvious. Judging from the current situation, there are actually many cases like this. Trump, turn right together. It's obvious that there are many, especially recently after Argentina. This is another country in Latin America shifting to the right, because this actually means that this is also the current global situation. Right now, both China and the US are continuing to diverge, and with this ongoing divergence, you really need to have a main rival. So while confronting your main rival, you also need to consolidate your influence in nearby regions and neighboring countries. Central and South America have long been regarded by the US as its sphere of influence. So actually, the US currently has a relatively clearer stance towards Central and South America. This is an event happening within the broader context, and we'll have to see if there will be more follow-up actions. In fact, there probably will be more such incidents going forward. And as for the US, the impact will likely keep growing, with more and more incidents and news stories emerging. As for changes, on the US government side, Trump has already said that he will also be the next Fed chair. So people are probably speculating about this, right? But for now, it just hasn't been announced yet. And why hasn't it been announced? It could be because at the moment, things are still uncertain and the expectations aren't very clear yet. And then writing it this way in December actually isn't a very certain thing either. And as for what the next steps will be, no one is really sure. It's also possible that it could be scrapped altogether. In fact, on February 10th, there could still be some relative impact, but that possibility should be pretty low. But it seems that this news hasn't been released yet. It's possible that they're waiting for the right time to boost market confidence, because if they were to remove the current chairperson entirely, then we would clearly know that the new chairperson would be taking orders from Trump. A significant rate cut afterward is actually something that can be anticipated, but this is all before that news comes out. So everyone will probably still be watching the current situation with the Fed, their meetings, and their statements. That's why it's possible they're waiting for the right timing. It's just that right now, market sentiment is still relatively weak. However, there's also another possible direction, which could actually be beneficial for the market, meaning that at the moment, everyone already knows who the main player is and what they're going to do, so there aren't really any surprises left. So no matter when you make the announcement, it doesn't really make a difference. Right now, it's just a matter of seeing whether they actually make the announcement later on, and if not, how the market will react. Right now, actually, in a market, the current situation is that we're at the end of the balance sheet reduction, and corporate buybacks are relatively weak in terms of momentum. So why does the stock market still seem like everyone is so optimistic? Because we're already in December and everyone is looking to the future, so the new year's coming. The new year actually gives us a lot of reasons to be optimistic, whether it's fiscal policy, elections, corporate earnings, or interest rate cuts and so on. There's always a sense of hope that comes with the new year. So at the moment, the momentum for the stock market to rise, or you could say this narrative, still exists. And typically in December, we expect to add to our investment list because December is an earnings season and there aren't any major events. Plus, the repatriation of funds is gradually coming to an end. So right now, the factors influencing the market are actually relatively few, and the impact is also relatively limited. As for what comes next, recently, we've seen that Google has clearly reversed its momentum over the past few months and has become the new darling of AI. In fact, just a few months ago, Google was still facing challenges related to AI, or you could say due to legal issues. After being challenged by OpenAI, ChatGPT started eating away at its territory. Many people have had concerns, and in recent days or weeks, this TPU has become the focus of the market. Looking ahead, it seems that this TPU is clearly paving a path that's different from just catching up. And this is something Google has been working on for a long time. And since Google is currently also has a lot of advantages up front, and it's also making a lot of progress in applications. At the same time, it has also secured many orders. So looking ahead, it seems that Google and its supply chain companies or companies with strong momentum recently will be the focus in this series. On the other hand, there will be some relatively weaker players. No matter whether it's OpenAI or the main force in AI, and even with TPU, it can't really threaten OpenAI. Right now, the most advanced models on the market, or the most powerful computing power or the fastest speeds, still come from the OpenAI ecosystem. OpenAI will definitely remain one of the most important companies in the future development of AI. At the moment, actually, the stock price is relatively weak, which gives everyone a potential opportunity. Next, aside from this main theme of AI, in the context of the pullback in November, we noticed that some companies, like those involved in American manufacturing and those supported by the US, didn't experience a significant pullback. And in the past few days, their gains, or you could say the rebound, has also been quite significant. So this is indeed a real investment opportunity. This also aligns with what we mentioned earlier about the US. Right now, what they want is to more clearly emulate China. It seems the country wants to more explicitly support certain companies and inject more resources into specific industries. Correspondingly, these are our investment opportunities. So this is also an area everyone can continue to track going forward. At the moment, the volatility in November, why was November so volatile with all those ups and downs when there didn't seem to be any particular reason? Actually, it still comes down to expectations. If you look back now from December 1st, you can see that looking back at the performance in November, you can see that the stock market's movements were actually quite closely tied to expectations. The rebound at the end of the month was also due to expectations rising again. All right, let's take a look at a few individual stocks. Right now, Google actually stands out as a relatively clear benchmark. For those who already hold it, you can continue to hold on. If you're looking to buy in later, you can look for a good entry point. This is a kind of trend following strategy, and its subsequent performance is quite similar to this situation. So for now, that's basically how things stand. In the past few days, the biggest gainer in this sector has been Broadcom, and Broadcom's stock prices performed quite well. So going forward, you might want to see if there are any pullback opportunities. These are companies with strong momentum right now, but the market tends to rotate. It looks like this trend is long-term, so if these companies experience any corrections in the future, that could be a good entry point for everyone. You can keep an eye on these few companies and consider them as potential investment targets. Next up, let's talk about Select and the module manufacturers. It's pretty straightforward. You can see from their rebound that they haven't bounced back to their previous highs. So relatively speaking, they're still a bit more subdued at the moment. Cohere has rotated as well and also rebounded, but again, it hasn't reached its previous high. Overall, even the strong stocks have clearly rebounded, but none of them have returned to their previous highs. So at present, the pace of the market is changing, just like we mentioned at the beginning. Right now, it's not really entering a true second wave of a rally. It's more of a rebound after a steep drop, and this rebound is giving everyone a chance to recover some opportunities. So the suggestion we gave in the title at the very start is something everyone can consider. Maintain a balanced approach to your investments and keep some cash on hand. As for LIT, this company has actually performed relatively well. That one is hitting new highs and the breakout was pretty clear. So actually going forward, everyone can keep an eye on it. So it's worth continuing to track and monitor. Anyway, right now I'm looking at Nvidia. As for Nvidia, its current performance is relatively weak, but overall, the concerns people have about it are still fairly moderate. Because right now, to answer your question, this is actually the top tier company in this sector, and going forward, it'll continue to benefit, relatively speaking. The ones under more pressure are probably the smaller companies like AMD and so on, but if you look at AMD's stock price, its trend is actually better than Nvidia's. So in this area, I just keep an eye on it. Next, let's talk about Jitun. We just mentioned Made in America and car companies. First, if we talk about Anchor, its pullback actually only went down to the 5-day moving average before it ended. Unlike other stocks that pull back to the half-year moving average, this pullback was relatively small and it rebounded quickly. You can also see that this rebound didn't surpass the previous high, so you can tell that the stock market is still showing a weak rebound pattern at the moment. Another example is Intel. Right now, if you look at Intel, it at least represents the current US market, and going forward, it actually has more opportunities in foundry services. So looking ahead, it seems like it's a very clear investment target. Of course, the timing and positioning should work out pretty well. All right, next, looking at the overall situation, why can we be optimistic about next year? The main reason is that, but actually, a lot of the impact from this year will weaken. This year, we saw the sudden and intense start of a tariff war. At first, the tariff war was very serious, but then it quickly backed off. However, this key retreat actually took some time before its effects became apparent today. In the beginning, everyone was still on edge, keeping a close watch, and companies were still making moves, even pulling in shipments ahead of time. By 2026, the impact should be relatively weaker. Overall, the effect of tariffs is gradually decreasing, and the US has also been quietly lowering tariffs for many countries. This includes everyday goods and food products. Tariffs have clearly gone down. In addition, this year, the major US bill that was passed has reduced tax revenue. This will continue to have an effect, and next year will also be a year of tax cuts, so the positive impact on income is certain. In addition, economic growth is still expected to remain steady. Right now, everyone is closely watching the application of AI and how well generative AI can be monetized. So in this case, if you only have 4 types of investments, that's no longer enough to meet market demand. This is also something we've clearly observed in recent months. The 4th option is to borrow money to invest, or even if you're just doing it for the possibility of something better and investing ahead of time, then actually, will people buy into it? Because you have to have a clear purpose or a definite profit or clear financial management that truly represents optimization. If you haven't achieved these things and are just investing for the sake of investing, this risk is currently being amplified and overinterpreted. So right now, actually, this situation does exist. The original narrative around AI was that you invest in it and then get real returns from companies like Google and so on. So that's the current situation. Looking ahead, by 2026, people will be relatively optimistic. In terms of the economy, the driving force in recent years, especially this year, has clearly been AI. In the future, there may be even more AI applications emerging, and as these come out, they will drive even more sectors that can benefit. So this is the current hope, and it's actually the main reason why all the major investment banks are relatively optimistic right now. In fact, before 2026 arrives, people have expressed even more reasons for optimism. This is also part of the year after year investment cycle. All right, next, Musk mentioned that there needs to be some real currency and that energy cannot be controlled through legislation. The government also can't just counterfeit energy the way it can print fake money, because this is something you simply can't fake. And then the interview covered a lot of other things, but another point mentioned was Bitcoin. He said that Bitcoin is essentially energy. It relies on energy to exist. So going forward, this will actually be a major investment theme. This trend will continue through 2026 and beyond. So in the future, we'll be doing more research in this area. As for the investment themes for 2026, right now it looks like AI, energy, and certain metals are areas you can focus on. Actually, over the past few days, metals have shown a pretty clear rebound. So going forward, metals and related stocks are also a very obvious trend, especially since prices are still relatively high right now. Plus, the monetary environment remains relatively loose. So metals with relative scarcity value, whether for hedging or for future applications, will continue to be important. They'll need to be able to stand out. They're relatively good at preserving value. Next, let's talk about international stock markets. Actually, looking ahead as things develop, it looks like the US will continue to cut interest rates, so capital is expected to flow out of the US, and in the later stages, international stock markets will benefit even more. International stock markets could include Asian markets like Japan, South Korea, Taiwan, and so on. Other than that, there are also small cap stocks and healthcare. There are actually quite a few options in this area, and we'll help everyone narrow them down later on. As you can see, investment banks are currently very optimistic in their forecasts, but everyone should be aware that in the investment market, actually, when we talk about a 2020 price, let's say a certain level, I have encountered cases where it meets the target, but how exactly do we reach that point, or what it means to reach it, is something we need to think about. So while this level can give us a final goal, it can't tell us about the process to get there. This process could be ongoing. It might slowly reach that level and then fall back. So this is the part we need to think about. When a certain level is proposed, well, it's just a level. How do we get there? Or what is the overall market environment? These still need further examination. Now, looking at the current pre-market strength, it's only partial. At present, the overall chemical market, the current situation is relatively, well, more in risk zone B. If we look at today's closing or the ISN, at the very least, can the index reflect the market's confidence? Actually, by observing the closing prices over the past few days or the recent stock market performance, we can see if things are stabilizing and whether the momentum and rhythm of this rebound can continue. As for now, the gains are mainly in certain areas. There are fewer large cap stocks leading. Currently, it's mostly small cap stocks at the forefront. As for the declines, actually, most stocks are falling. That's the situation with the S&P 100. Currently, the ones rising the most in pre-market are these. Hypnosis. As for the others, there is nothing particularly notable, no clear performance. In pre-market, the biggest drops are in Sandex and cryptocurrency-related stocks. Right now, actually, cryptocurrencies seem to be a relatively leading indicator. Looking ahead, the overall trend for cryptocurrencies is still relatively weak right now, which is also weighing things down. As for the current market sentiment, aside from Sandex, stocks like Micron, for example, Terita and MD are also showing relatively weak trends. Overall, the market is still pretty weak at the moment. So in the next few days, we'll have to see if, as we mentioned earlier, the economic data can help stabilize market confidence and allow things to turn around. We'll see if the rebound can continue upward. I'll keep watching this in the coming days and we'll observe it together. All right, that's all for today's session. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.